In this video, you'll learn about the opening bell, how it works, and frequently asked questions. The opening bell is a symbolic and practical event that marks the beginning of the trading session on major stock exchanges, such as the New York Stock Exchange, NYSE, and the Nasdaq. It signifies the official start of the trading day, typically at 9:30 a.m. Eastern Time, ET, in the United States. The opening bell is often accompanied by a ceremonial ringing, frequently performed by executives of publicly traded companies, celebrities, or dignitaries. Beyond its ceremonial aspect, the opening bell also serves a critical function by signaling to traders, investors, and market participants that they can begin executing trades in the live market. Here's how the opening bell works. Pre-market trading. Before the official opening, investors can participate in pre-market trading, which typically starts as early as 4 a.m. ET for some platforms. Institutional investors, hedge funds, and traders analyze overnight news, earnings reports, global market trends, and economic data to make informed decisions before the market officially opens. Pre-market prices fluctuate based on supply and demand, often giving clues about how the regular trading session might unfold. The bell rings at 9:30 a.m. ET. At exactly 9:30 a.m. ET, a loud bell or buzzer rings at the stock exchange floor, signaling the start of the regular trading session. At the NYSE, the bell is rung at the podium on the trading floor. On the Nasdaq, the bell ringing is symbolic as Nasdaq operates electronically without a physical trading floor. The opening auction determines the initial prices of stocks based on orders placed before the opening. Market open volatility. The first 30 minutes of trading, 9:30 a.m. 10 a.m. ET, is often one of the most volatile periods of the day. Large institutional investors execute trades based on overnight news, analyst upgrades/downgrades, or economic data releases. High volatility in this period can create opportunities for day traders, but it also carries risks due to unpredictable price swings. Trading continues until the closing bell, 4 p.m. ET. After the opening, trading continues throughout the day, influenced by economic reports, company news, and investor sentiment. The market closes at 4 p.m. ET, marked by the closing bell, which mirrors the opening bell ceremony. Here are the frequently asked questions. Who rings the opening bell? Typically, the bell is rung by exchange officials unless a company, celebrity, or organization has been invited. Newly listed companies often ring the bell to celebrate their IPO debut. Does the bell affect stock prices? The bell itself does not directly impact stock prices, but the events surrounding the market open, such as overnight news, earnings reports, and economic data, can lead to price volatility. Is the opening bell the same across all stock markets? No, each stock exchange has its own opening procedures. NYSE rings a physical bell at 9:30 a.m. ET. Nasdaq uses a digital countdown and buzzer system. London Stock Exchange, LSE, opens at 8 a.m. GMT. Tokyo Stock Exchange, TSE, opens at 9 a.m. Japan Standard Time, JST. What is the difference between pre-market trading and the regular session? Pre-market trading occurs before the opening bell, typically from 4 a.m. 9:30 a.m. ET. The regular session runs from 9:30 a.m. 4 p.m. ET. Pre-market trades tend to be lower in volume and can have wider bid-ask spreads due to lower liquidity. Can retail investors trade at the opening bell? Yes, retail investors can place market orders or limit orders before the opening bell, which will be executed as soon as the market opens. However, due to high volatility at the open, prices may fluctuate significantly. How does the opening auction work? Before the market opens, stock orders accumulate in a central order book. The opening auction determines the initial price for stocks based on supply and demand. Market makers help ensure liquidity by balancing buy and sell orders.